Good day, everybody, and welcome back to the show. Today, I'm so excited to have our guest, Tracy Hubbard, on from Hubbard Capital Group. Tracy, thanks so much for being here.
Thank you so much for having me.
Awesome. So, everybody, Tracy is a real estate investor and syndicator, professional Forex trader, and serial entrepreneur, having owned and operated 6 companies across various industries. Tracy has traded in the financial markets for the last 20 years and owns 6 businesses, and he can translate those experiences into real estate. So, Tracy, I know you just have so much life experience to share with our listeners. Why don't you take us back in time and tell us a bit about your journey and what drew you into real estate?
Sure, I'll be glad to. Thank you. Well, I'm in my 60s, so as you said, I've had a lot of time to have a lot of those experiences. They say, in my previous younger days, I'm a former Marine, United States Marine, so that gave me a lot of building blocks to go off of as far as in my career, as far as learning how to stick with stuff and overcoming any kind of obstacles I might have, and just you just can't quit. You just got to keep moving forward. Um, that sort of gave me the base of my career, my entrepreneurial career. Like I said, I've owned several businesses. Well, one of those businesses bankrupted me back in the late 90s. So there I was, 42 years of age with 4 young children, having to start over. So I had to reinvent myself, and I didn't really know anything about the financial markets at that time, but started going into the financial markets, started trading the markets, and over time gradually became pretty good at it, to the point where I ran a couple of hedge funds. Um, and traded my own accounts, and did very well at it for about 15, 20 years. Then I noticed the market started changing quite a bit in 2015, actually more like in 2008 and 9, when the Fed started getting heavily involved with their quantitative easing and all the different things they did there. It became a little bit more difficult to make consistent money in the markets, the financial markets. So that's when I started transferring over into hard assets, real estate being the main one. I want to get in hard assets because of all the things I saw in the financial markets. So,
Awesome. So you just touched on an entire life story there. So let's go back and what was that? What business were you in the 90s, and what was that experience like going through bankruptcy, and how did you come back from that?
okay. So I bought my first company back in 1987, and it was a basically an HVAC service company. Really didn't know a lot about it, but it was a service industry that I understood. So I bought that business and had it for about 2 or 3 years, increased it, and then sold it and parlayed that into another industry, which is logistics warehousing. I bought that business in '89. Uh, Bought that company for $100,000 and ended up selling it for about $1 million about 3 or 4 years later. Thought I was going to retire. So that's how naive I was. That was right around Desert Storm, is when that was, back in 91, 92. And I thought I'd retire. I was still very, very young, in my 30s. I never played golf, took up golf. I wish I'd never done that. That was the biggest waste of time. And so you need to be good at golf or good at your business, because it's hard to be good at both because it takes so much time. So I did that for a few years and got bored and thought I'd go back and buy another business. Bought a manufacturing company, a couple of different companies in there. That was the company that basically bankrupted me. And I won't go into the gory details of it, other than to say that I lost everything when we went through bankruptcy. It wasn't one of these, okay, I'll just file bankruptcy on paper and go start up somewhere else. We literally lost everything. And so I had to figure out what I was going to do. And how I was going to recover from it. And that was my first experience, is really having to, quote, really reinvent myself. And I've been in different businesses, and you can always find someone that can be an expert in that business to help you out. But going into the financial markets was a whole new realm. So I had to pretty much self-taught on that thing. That before the internet was really that prolific. So I spent a lot of time traveling across the country trying to figure out how to learn how to trade the markets, going to seminars, talking to people, that kind of thing.
And just real quick, Tracy, just to pause you for a second. So, I know you had 4 young children at the time of bankruptcy, and we talked before the call about how your military background kind of sort of has influenced your career in business. So was there some sort of mentality that mindset that you were able to develop that helped you kind of recover from a pretty difficult place?
Yes, and I would lean on my family for that, very much so. My children being very young, my biggest concern, to be honest with you, on that kind of stuff is when I went through the bankruptcy, and I made some mistakes going into up to it and through it by trying to salvage the thing when it was really past repair, and I cashed in everything I had trying to save something that couldn't be saved, and that was a mistake, and that was my pride, basically not wanting to admit failure on something. And my concern was my kids would look at me and say that, and look at me and think of me as a failure. But kids are resilient, and their biggest concern was, not that we were going to lose everything, and which was, the house on the golf course, the country club, and blah blah blah, and private education, all those kind of things. They didn't care about that. All they want to know is that we're a family and we're together. And we were still a family, still together in a much, much smaller little place, with, barely two pennies rubbed together. But that's all they really cared about. So your family, it helped me get through that. Everybody's a spiritual person. I leaned heavily on my religious beliefs and to get me through that. Because some days, you wake up and you just got to get out of bed whether you want to or not and keep moving forward. And that's what you got to keep doing, because sooner or later, if you're not moving forward, you're not going to discover some things. And so it's through that process of just getting up and doing it, got me through it. Then my wife set me down and said, hey, this year, because I was getting a little bit, I would say, depressed. And she pretty much looked at me and said, one day on the couch, she goes, what are you doing? And I go, what do you mean? What am I doing? I'm like, what? Today, you want some errands run? He goes, no, what are you doing? Because this is not who you are. You need to get up off the couch and, go do what you do, which is create things and, solve people's problems. And so, she helped me get through that it was a pretty dark time. So she helped me through that. The reason I didn't want to talk about that, because I thought I may get emotional if we start going down too far down this path. But it was very, it's like I say, family got me through a lot of that stuff.
Yeah, that's amazing. Thank you so much for sharing some of that. I mean, it's just so important for everyone to have examples of, coming back from adversity and overcoming, and just, coming from a deep place. Anyway, so thank you for touching on that.
And I will say something. That's something my children now, who are all grown adults in their 30s, who come back and said, Dad, that's something we all learned you know, is how you just keep moving forward. When you have disappointments, you're going to have them. I don't care what you do in life, you're going to have them. And they said, we've watched you reinvent yourself several times, and if there's something that you want to do, we have no doubt you could do it if you really want to do it. So
Yeah, what an amazing example to set for your children, and for them to witness you. I mean, they're going to model what you do. So yeah. Okay, so you decided to turn towards trading it, and you're telling us about the education that you were pursuing. And let's pick up there.
So, like I said, and actually was the reason I even got into trading was a good friend of mine from high school, who's an insurance agent of mine, told me, he said, why don't you go trade the markets? I said, I don't know the first thing about the markets, because all my businesses, I really pretty much invested back in my own company. I didn't invest in the markets. And he goes, well, you like putting together deals. And he goes, you put a deal together every day in the market. So that's pretty much how I started off on that track. And sort of interesting that, I went out and opened up an account in commodities and started trading commodities. And I remember the first trade I ever made was on frozen concentrated orange juice. You can actually trade orange juice futures and out of New York. So I made a trade, put in a trade, and I made, I think, like $450. But it was pretty quick. And I thought, wow, this was easy. I'm back on easy street. I'm just going to, parlay this right back on back. I'll be back up, in the millions again. So I promptly did that until I lost everything I had. So it didn't take long because I didn't have much money to be working with. So when I did that, I learned two things. Number one, I learned, yes, you can make money in the markets. And number two, I didn't know how to do it yet. So I set out to start learning how to do this. And like I said, this was, pre, prolific internet days. And so I would, grab every book I could read on the markets. I would call the author of the book and actually say, hey, I track them down and say, hey, I would love it if you would just, spend a few hours with me. I'd be glad to pay you for your time. I'll buy your lunch. I'll travel to wherever you are. Just tell me how to do this. And so I literally traveled all over the country looking for people and learning how to try to trade. And it was a trial and error thing. So found out real quick, it was more about risk management than it is about making money. And that's what I learned more about in the markets was risk management. That's really what you are as a trader. You're a risk manager. That's what you are. So I learned a lot about that in trial and error. But then after a while, I got pretty good at it to where I had a track record, and then people were wanting to give me money to trade for them. So that's sort of how I parlayed it into a hedge fund.
Okay. And then you were in hedge funds for a while. Can you tell us what that was like?
Well, and that's just I guess that's sort of a term that's thrown around out there. It was a private investment fund is what it was. People would give me their money, and I got licensed to trade, manage their accounts and trade everything for them. And I pulled a percentage of profits for it for doing that. And I did that mainly because starting out, I didn't have a large amount of money to trade myself. So this was a way to take my skills and, get paid for it. So I would trade their accounts and trade my accounts also. And that's how I did that. I did that for several years.
Okay. Yeah. And I think you mentioned that it was successful. And then in 2008 and 2009, can you tell us about, how that changed, how that journey changed for you over the years?
Right. And so I was trading, and so let me back up just a tad bit here. So I was trading commodities, starting in 98. Well, on 9/11, I was trading the markets when the planes hit the tower in the Pentagon and everything. So, and everybody, if you're old enough to remember what it was like then, I mean, everything shut down for a while. And um, it was such that my brokers were located in New York. I couldn't get a hold of my brokers. I was in open positions in natural gas trading. I had no idea what the situation was. I had no idea if my broker was even alive because I knew he was in Tower 7 that was evacuated and got crushed by one of the other towers when it fell on it. But so it's one of those kind of things where I didn't know what was going on. But he called me from his cell phone a couple of days later and told me, this is where the situation is. And so I was able to get through that time. It was a little crazy there for a while when they opened the markets back up. It was very volatile, and it could have cost me a lot of money, but I was able to get out pretty flush with it. And then that's when I stepped back and said, I need something that's a little bit more liquid than what I was trading in the commodities market, and something that I could trade in and out of a lot faster. So that's sort of how I got into the Forex market, which stands for foreign exchange. Currency trading is what that is. And it was sort of the wild, wild west back then. And so in 2002, that's why I moved over and started trading the currency markets, and still trade a little bit of commodities, but mainly was the currencies. And that's what I've done most of in the last, since 2002 is trading currencies. And that's when I also set up those investments funds and we're trading currencies.
Okay. Can you explain what that means for our listeners who aren't so familiar with what trading currencies is?
Sure. It's the simplest way I can say is let's take the US dollar and then the euro. Well, those are two different currencies from two different countries, but they also have a fluctuation. If you've ever gone to the airport or ever traveled internationally, you've probably traded currencies because if you're going to go to Europe, when you land, if you're going to spend euros, you're going to have to go over there and buy some euros. So how are you going to buy the euros? Well, you're going to buy them and pay for them with your US dollar. So that's how it's done. Now, the rate, the currency exchange rate is like, okay, like right now it's probably trading right around $1.15. It takes $1.15 US dollars to buy 1 euro. So that's how you're trading it. And then as the rates change, and they fluctuate constantly, 24 hours a day, 5 days a week. They do close on Friday afternoons. But then they open up Sunday afternoons because that's where the market's open in Japan. In the Far East, that's where the day begins. So when you're trading currency, you're just trading one against the other is what that is. That's all trading currencies are. And you're waiting for the difference of the rate. And you think, well, how did they move that quickly? Well, they move in, small increments. It doesn't trade just at a penny at a time. It trades in 1/100th of a penny. So you say, how can you make any money do that? Well, it's done with the leverage. So you control large blocks of money. So if you're controlling $1 million worth of currency, it does not have to move very far if you make a lot of money if you're controlling $1 million worth of currency. So that's essentially how it works.
Okay, great. So you got into currency trading, and then what happened like 2008, 2015, when there was more regulations? Can you talk about that?
Yes, well, so this sort of goes into what happens with currencies and why do they even move? Well, usually for a current, think of a currency, what it's considered as value, how's it valued? Sort of like the stock of that country. It'd be like if they had a stock on traded on the market. So, well, it'd be their currency. Is their currency valuable? Well, the U.S. dollar is the reserve currency of the world. So yes, it's got stability and all that kind of stuff. So um, when you're looking at trying to make a decision, and I sort of got sidetracked on your question there. The markets change based off of interest rates. That's sort of what drives the value of the currency. So think back 2008 and during the market crash. What did the banks do back when that happened? If you think about right before it happened, you're looking at interest rates of the countries, different countries, U.S. or in Britain and Europe, they were all probably trading up, in the 5 and 6% range was their Fed interest rates. Well, the difference in the interest rates is usually what drives a lot of the value of the currency. And so interest rates don't change rapidly. So it's a very steady curve. That's what makes currency trading great, or used to, because it was a slow process. They don't go in there and just go from 4 or 5% interest rate down to 2. They gradually do that. So, but as those gradually start changing, that will start driving the value of that currency one direction or the other. So you trade one against the other. Now, in 2007 and 8, when the housing crash started happening, they started lowering interest rates. It was a race to the bottom. So everybody started lowering rates. So now where are we sitting at right now? Well, everybody's sitting, at almost 0% interest. Well, if there's no interest differential between the US dollar and the euro or anybody else, there's not going to be much movement. So now what you have is nothing but a bunch of choppiness and manipulation and rumor mill. That's pretty much started happening in 2008 and 9. And it's just really never has gotten back because of that. And it won't until there's really something you can do. Now, granted, the markets move if you were looking at a chart of them, but they're not consistently. It just jumps back and forth. It's a high risk environment. And like I say, it's not as predictable as it used to be. So that's why I got out of it. So it was everybody's race to the bottom as far as interest rates, which has been a blessing for the real estate market though. So
okay, perfect segue. So
yeah.
From commodities to currencies, and then you turn to real estate. Is that right?
Correct.
Okay, let's talk about that. What was attractive about real estate, and why did you get into it, and how has that been since then?
Well, one thing that was attractive about it was a hard asset. Like I said, a stock can go to zero. You can have massive manipulation of interest rates and things by the government as far as, that it could affect the currencies. And you can have tremendous intervention by the federal banks on their currencies, interest rates also. So when I looked at something and said, what can I get into that has value that's going to be there, real store of assets? And that was pretty much real estate. And I dabbled in real estate in the 90s when I had logistics warehousing companies, so industrial real estate. So I knew the value and how it worked. The biggest thing I didn't like about real estate was the leverage factor, believe it or not, mainly because as a guy that went bankrupt, I didn't like debt. So that was one reason I didn't, go into any kind of real estate before that. But then as the interest rates started piling back down, then the leverage looked more attractive. And it was, I guess you can say it's good debt. It's not go out and, it's not credit debt or credit card debt or something like that. Real estate debt is an appreciating asset with cash flow. So that was good. And then as interest rates started coming down, it became more and more attractive too. So.
Okay, awesome. So what was your first move when you were getting into real estate?
Well, first thing I did was I tried to find some mentors and who could help me figure out how to do this, because I know how to run business, but real estate, especially investment real estate, is a whole different. It's got a business component to it, which I like, but you still need to know what you're doing. So I tried to find people who would help me do that. I got involved in some small multifamily stuff up near Chicago area, like a brownstone. So it's like a 6-7 unit brownstone. Got involved in one of those, and then I realized real quick, okay, this is multifamily, but my goodness, this is really hard to scale to kind of make any kind of money for me from that perspective. So I thought I've got to get into bigger multifamily and started looking at it saying, okay, I really need to get into like 100+ units. Well, now you're stepping up to a whole different ballgame as far as just the pricing value and getting financing. And I don't care what your net worth is. If you don't have experience in multifamily, you're not going to get a loan from a bank, from Fannie Mae or Freddie, uh, to do a multifamily that size if you don't have the credibility behind that. So that's when I need to bring some partners in. And I didn't have a whole lot of partners in my past, real business dealing. So I had to, bring that part of it into, you need a lot of, it takes a lot of moving parts and a lot of people on a team to make a large multifamily project work out. So that's when I started looking to bring in partners and who could help me get this done. And that's pretty much when I started realizing, okay, to scale this, I'm gonna have to get into the bigger multifamily stuff. And that's what I started doing and looking at in 2016 and 17.
Okay, well, that was a pretty good time to be getting into multifamily. Can
Yes.
you tell me like just some lessons learned, or some stories from, what worked at that time, what didn't work?
Well, the biggest, there's two things you need when you're going into multifamily of that scale. You have two things. You need to have deal flow, which means you got to be able to look at some properties, and you have to be able to raise money. So you're always constantly doing one of those two things. I'm constantly doing that. So deal flow. So that's going out there and finding, properties that are being sold. Well, it's one thing to go out there and you go out and look at all the listings. Well, everybody else is seeing them too. So guess what? You're just one number in the crowd, and how are you gonna step out among everybody else? Plus, you get into these bidding wars. So whoever wins actually loses most of the time because they're the ones who end up paying too much, but they want the deal. So I let them have the deal. So I learned pretty quickly. I started cultivating relationships with brokers, and that's what I've had to do, is because if you cultivate a relationship with a broker and they know you can actually do the deal and close the deal, because that's their biggest concern, can you close this deal? If you can prove that to them and you get one under your belt, then they'll start bringing you more deals, and they're called pocket listings and they're off market. So you get a shot at it before it hits the big market to see if you can get the deal done and tied up before anybody else even knows about it. Well, that's what you got to do in this business. So, and I'm constantly, working on those relationships with those brokers to bring me deals, because now I've got the reputation that I can get them done, and that's how it sort of works. So.
Yeah, for sure. And this is a common topic in our circle. What recommendations would you have to folks who are looking to build those relationships with brokers?
Take the time, make the trip. It depends on where you live, obviously, but you gotta spend some money and go places and spend some time in that area, learning that market and going and you need to go see those brokers. It may mean going by them and saying, "Hey, I'm a live person. I really want to do some deals," to get them to pay attention to you. So you got to spend some time doing that. Now, depending on what market you're in, and I live in the Dallas Fort Worth area in Texas. Well, that's probably the multifamily capital of the world, and so there's a lot of people doing that here. So it's a big pond, and I don't care, you're going to be a little fish in a big pond. So I started going out and looking at what we call the tertiary markets, some of your smaller markets. And I know a lot of my friends and stuff that are doing that now are starting looking into those smaller cities. Uh, the Tulsa, Oklahoma's, the Little Rock, Arkansas, some of the smaller cities. Corpus Christi, Texas is a big market. It's not a big market, but it's a very good market now, just like I've done. And Lubbock, Texas, is where I've got 3 properties right now, over 400 doors up there. So, and those are tertiary markets that there's not as many people, wasn't as many people, I will clarify that, wasn't as many people. Now they're starting to, it's starting to get a little bit of attention, but you could find better deals up there to get better returns. And when I say, Dallas Fort Worth is a crowded market, it doesn't mean there's not deals here, but it's hard to find the kind of returns that most of my investors were looking for. So they would be a lot smaller returns if you're going to invest in Dallas Fort Worth. So from that perspective, I went out to the smaller markets to get those returns.
For sure. Awesome. Well, Tracy, I know that we have a lot more that we can talk about, and I definitely want to have you on some more to just go more in depth into your multifamily investing and what you're doing now, how you've pivoted. So, but for now, let's just You gave us a ton of great information, a ton of value. We can't wait to have you on next time. Why don't you take a minute and share with the listeners how they can get in touch with you and anything else you'd like to share?
Sure, I'd love to. Thank you. My website is hubbardcapitalgroup.com. That's Hubbard capitalgroup.com. And you can go there and find all my contact information. That's our website. And you'll notice also in there, other than multifamily, we also do agricultural and vineyard syndications now in Texas. So go check it out and see if there's anything you're interested in, and give me a call. I'd love to talk to you about it.
Awesome, everyone. Definitely check out Tracy's website, and we'll make sure to have you on again very soon to talk about your real estate investing experience more in depth. Thanks so much, Tracy. See you next time.
Thank you. I enjoyed it, and I look forward to coming back.